very interesting journey that CBZ has been taking. I think one of a profitable trajectory. Today, you've just gathered us here. If you may just make our viewers just understand, in short, how are your figures looking like so far?
So on the financial performance, let me start with the bottom line. We had net profits of 32 million, and that's a solid performance for the first half, despite the headwinds that we had. The numbers get more exciting when we look at the balance sheet. We hit $1 billion in terms of total deposits, largely made up of, say, 700 million in demand deposits, 100 million roughly in time and savings deposits. There have been accusations against the banking sector that we are not availing savings products to our customers and clients, but we have seen growth in both savings and time deposits, and then finally almost 200 million in lines of credit. I did mention that the lines of credit are coming at a cost, but it's a cost that we have to bear as a financial services institution in order to provide capacity to our customers and clients, especially those in the productive sector.
I know you've got many holding entities. What is the major cash cow right now that's driving your revenues?
Well, it has been the bank for the longest of times.
Yeah.
You may be aware that the bank started in 1980. Then we started branching out in around 2005 with the acquisition of DatVest, which is an asset management company. And then thereafter, there have been other acquisitions. The group was formed 25 years after the bank was established. So I can understand when the average person views CBZ Holdings as CBZ Bank, because it is the largest. I would say around 80% of the contribution, if not higher, comes from the bank. Also, in terms of the balance sheet, it is the largest. Just on the balance sheet, the one area we are not happy about is our loan portfolio has been growing at a slower pace than the growth of deposits, that 1 billion that I talked about. It's a measured approach. It's deliberate and measured on our part. In the past, we have struggled with bad assets. We have spent the last 2 to 3 years cleaning up our balance sheet. I would argue that it's as clean as can be. When I look at non-performing loans at the bank, just below 5%. So happy that we are below international benchmark, and we do not have a lot of toxic assets that are bubbling in that balance sheet. Therefore, it gives us an opportunity to enhance our growth, but ensuring that it remains quality growth. I was saying, out of deposits of $1 billion, I expect our loan book to be at least $500 million, so that we have a loan to deposit ratio of 50%.
Let's speak about the accusation that you raised. This has been a very contentious issue as far as savings are concerned in Zimbabwe. Not much of benefits or gains are being attained out of savings. It seems to be much more of an expense to actually save in the banks. How are you solving this serious issue?
So the average person wants a transactional account, which is normally called a demand deposit. A demand deposit is where you go to the bank anytime. 20, 30 years ago, it used to be during working hours. Now it's beyond working hours in that you can transfer money from your bank account to a wallet. You can use your card to swipe. Therefore, that demand account is now means that your funds are available 24/7. The way banking works is we raise deposits, we pay interest, we deploy those deposits by giving loans, we get paid by those who would have borrowed, and our net is the difference between the interest that we pay and what we get paid. But if somebody has got their money in an account where they have access to it 24/7, it means you cannot deploy those funds and lend. Because if you lend them out and the owner of the funds
comes and withdraws all of it,
then you are in trouble. Which is why you will see Zimbabwean banks with low loan.
It's the trend all over, isn't it?
Well, but if you look at the world, it's different dynamics. It's when you pay interest, you're supposed to compensate depositors for loss of value. Therefore, if you are in Japan and the inflation rate is 1%, You will also find low interest rates obtaining in that part of the world.
Okay.
But ours, basically what I'm saying is, at CBZ, we have got a full range of products. And like I mentioned, we now have at least or around 100 million in savings accounts and in time deposits. And when you talk to those that have invested in that range of products, they are getting decent interest rates, 4-5% thereabouts.
Okay, one very interesting development you've been speaking about is your growth towards the region. You've been speaking about Botswana and other regional countries. Let's just have a bit of a glimpse into that.
Yeah, so for us it's odd that 45 years after the formation of CBZ and us being the largest financial services entity in the country, we only find ourselves in Zimbabwe.
Yeah.
So as we speak, we've got a representative office in South Africa. Okay. We need to derive more business out of that representative office. It belongs to the bank. We have made forays into Mauritius. That experience hasn't gone to our satisfaction. We are launching ourselves into the region in a focused way this time around. We are starting with our insurance businesses using the sell captive approach. We are going into short-term insurance in South Africa. It's the brownfield investment. We are also looking at the life business in South Africa, and I've been saying for the longest of times that you cannot ignore South Africa, given that 70% of insurance revenues on the entire continent from Cape to Cairo are in the South African market. Yeah. It talks of depth, it talks of scale, it talks of capacity. But we are going in a measured way. Because
what are your projections there?
In terms
of market acquisition?
We will look at any opportunities that avail themselves. But it's also to say when you acquire in a deep market that's well established, you also need to have deep pockets.
Yeah.
But when you acquire
deep, eh?
by Zimbabwean standards, but when you acquire, you also don't know what is on the balance sheet.
Okay.
So there are advantages in acquiring, but you better make sure that your due diligence is top notch and you do not get toxic assets onto the balance sheet, which is why others would prefer to go for greenfields. So in Botswana, we are looking at greenfield. We are looking at reinsurance broking, not the reinsurance business itself. So reinsurance broking provides services to the reinsurers who provide services to the insurance companies. So it's part of that value chain. We have chosen it because here in Zimbabwe, our risk advisory business, which is the broking side of insurance, has been doing well. And we think we can use our skills. We think we can go into partnerships in Botswana. And we are not just looking at the Botswana market. It's just going to be a launch pad for us to underwrite risk and assist in underwriting risk virtually across the continent and placing it in the London market and other markets which are deep with regards to insurance.
Okay. Thank you so much for the time.
Thank you.
I appreciate it.
Thank you.
Okay, so that's it from the CBZ CEO, Mr. Nyazema here. We're just getting highlights as far as the banking institution is concerned. Deep pockets, millions of profits they're still making. My name is Tonio. It's a wrap from me and the crew behind the scenes for now.